Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 21st, 2023. We just completed a good 90-minute session with the Foundations course where I was doing some applied coaching for three of the sessions that we recently recorded for Research 2023, taking a look at Luke Crockford's intraday trading system on the DAX, looking at Jeff Boccaccio's improvement to the Tortoise NDX and Williams percent R, which is some real genius work that he's done there. And then take a look at Sunal's developing coaching practice with hypnosis, which I am a student of now. I'm her first client, and she's a certified hypnotherapist in the UK now. She's done the work and knocked it out of the park. Plus, she's an amazing trader, so can't really go wrong. If you're interested in that, let me know, and we're trying to get an interest survey for her. Well, Greg, you could do worse than that. You know, choose your opponents wisely, right? All right, let's get this moved over here. All right, so let's start with the hybrid swing portfolio. So we're looking at 30-minute charts as usual, starting with Alcoa. And today we cashed yesterday's short, which we held overnight, and it started to reverse after the peak of the RL10. When that rolls over, I take the exit at the edge of the dragon, so we get that trade. Then it continued to cross, and the PSAR flipped, so I used a standard risk box on it, and that thing is now holding +1 after this +2. So I'm treating this as 3R of market's money for cushion, and I like the recovery in the market and the follow-through play. The test will be at 32 3/4, which is near the 10-day and 30-day high. So this is the tactical zone for tomorrow. We'll see what we get. And it's a Friday, so there's a good chance of one more tactical surge. AI was one of the few things that failed today. We were short that from yesterday, and we had held the position short, but the whole market was selling off, so I was able to absorb that initial adverse gap and missed the opportunity to put a second position on. So we just rode this one down all day, and then it bottomed out and started rolling up, and this felt like a really good trade to take at the edge of the dragon, and that gave us 2, 3, 4, 5, 6R on a single position, 2-day trade after a logical attitude to the short side. So that just is the way we do it. I mean, that's the normal work for normal conditions, standard work, normal conditions. Amazon covered the short from yesterday for an R, which was a stop and reverse from this one. And when this continued to improve and general strength in the market plus tech, I speculated in on the PSAR flip. We're holding an R overnight. Caterpillar covered the short on the owl entry short. This recovered, took the dragon exit in the usual way for 3R. I like that for tomorrow, and I'm looking to exploit that. Cliff, no trade. I like the sideways quiet channel. Disney, speculated in, held it through some tough times. It's a tight stop. We'll see. I'm sorry, that was CVS. So suffered through this and held it for an R. Disney, that's what we had 2 positions short overnight. That gapped up, started to sell off, but then it started recovering again, and that was enough. and we cashed a really nice trade. I missed the SSC on this one. I think there's a lot of room in that one for gains tomorrow, so it should be ready on a value play. Dish Network, no trade. Devon Energy covered the short, then speculated long, holding an R overnight. Electronic Arts, no trade. Emerging markets. Um, the This is the advantage of taking those when you got them. We avoided another one of those amazing inverse trade. This is why I am 95% of the time not holding EEM overnight, because you got our market is closed, but their markets are open. So whatever that move is, you can't get until it is processed into the gap. So this was the gap suffering that we avoided yesterday. We didn't take that loss. We were able to cash an intraday move. And then yesterday we were able to cash that short, and we missed this move. So sometimes you don't always feel the emotional satisfaction of an adverse gap that doesn't hurt. Like you're trying to imagine the pain that you're avoiding. You can't. It just know how much that hurts. And that's the reason for, in EEM especially, just rule of the road. Unless I got 5R in hand, even that would not have protected you here, but anything less than 5R in hand, and I'm taking the exit intraday. Just because. If you got to trade it, trade the futures while they're live and open. I do like this as a follow through for tomorrow. Kind of missed this afternoon move, but I had other things going on. Ethereum 123 entry, standard exit for an R. Mexico covered the short, and this is one where if I'd have just followed my own advice that was less than a minute old, we'd have cashed this one here yesterday instead of suffering, given back 2/3 of it to only capture 1R and given back 2. And then I couldn't get in the zero state and take advantage of that move. But it looks good for tomorrow. Brazil. Now that's one where we did get the short covered yesterday and then avoided that big run up. That would have taken a 6R trade and made it a 1R trade. So hopefully the point is made. Intel, speculating long on a 123 and a crossing of the VWAP. Standard entry, crossing the Bollinger Band mean as well. Stayed north of the VWAP all day. Went from winter to spring briefly and then into summer, and it closed very well. And it's got to do is get through 47 and a quarter, and it's long gone. International paper captured a half an hour. There was no weakness in that. No trade in real estate. Covered the 2-position short in Coca-Cola. That felt proper. It then proceeded to have a nice move into the close along with the rest of the market. So I'm actually optimistic about tomorrow's and early gains tomorrow. Regional banks, no trade. Mattel, this was an intraday short. So again, we cashed the win yesterday, avoided the gap up. It started rolling over, started failing again, so we get short, hoping to tap into this. This time it only got this far and then started to recover, so we escaped with a scratch. McDonald's initiated on general market improvement when it crossed the Bollinger Band mean and was north of a rising dragon, and the winter had turned to spring. I mean, like, why not? And the standard risk puts it right near the bottom of the dragon flip, and that closed nicely for an R. Holding that one for tomorrow. Merck, no trade. Microsoft, speculative short, scratched. Marijuana, short 1, holding 1R. Nvidia, no trade. That's going to do really well tomorrow, I think. Clean energy, that was a prediction, therefore means nothing. Just means to be prepared, which is something. It's not nothing. Clean that up a little bit. There we This was a long on a 1-2-3. It rolled over and gave us a quick 1 hour loss, and then I missed the revenge trade. Clean energy. Rivian covered the short for an R. SPY. This is the tale of of volatility. The huge sell-off, big gap up, fake sell-off, and then strong recovery. Boy, is that ready. That is shaking everybody out of their positions. So since we don't have a directional bias, I'm ready to trade that a continuation tomorrow or a failure back towards the middle of the dragon. So that'll be a nice trade tomorrow. Tactical Friday. Treasuries gave back some of their gains from yesterday. Tesla speculated long after covering the short. That's one I should have cashed. Note to self, be better. Speculated long on the Dragon Crossing, standard risk, closed well for an R. Walmart. Caught a 2. PSR flip. Turn to spring. Market strong. Holiday season. Gotta love Walmart. Speaking in headlines, U.S. Steel continued. This looks like a flattened piece of steel that was in the fire and has got hammered into a sheet of rapier thin steel, ready to cut. So we'll just enjoy the process. Spent some time talking about this diagram with the fellows in the Foundations course. It was a big feature of the speech I made to the True Storytelling Conference in Nashville last week, was the importance of accumulating evidence, seeking it out from the actions you take in a risk-managed world to generate evidence for improved beliefs, and then using experience and discipline to ratchet up your performance so that you don't backslide. The wedge of improvement, the inclined plane, the simplest tool known to man. That's how you lock that in. That's what our Greek hero needed, pushing that damn boulder up the hill, only to watch it roll back. He didn't have a wedge. +1 if you know the name of that Greek hero. There he is, Sisyphus. Never stops. That's what you do. You never stop. All right, let's get this one going. Sniper trade of the day. All right, so let's suppose that you find yourself in this position. The blue line is the open. These are 3-minute charts. And about 60 to 90 minutes into the day, you notice the following features. You have leg 1 down. Here you get a R10 wiggle and it fails again, so you get leg 2 down, and it comes to this peak, and then it reverses enough to do a PSAR flip and push, and this gets you back to the VWAP, but then it rolls over, and now that's a lower high, so you notice that's kind of a kata 2, and you notice it comes down and it never violates the PSAR that is flipped, and now the R10 reverses here, and in this bar it comes up into here, and your trader, your inner monkey, makes your entry right there for you. He doesn't even let you think about it. He does a knee-jerk reaction and just buys it and then panics. Oh no, what am I going to do? And you got to decide where to put your stop. Do you put it at 0, which is right below the R10, RL10, at the bottom of the dragon, at the current PSAR dot, or at the original PSAR flip? And you realize that if this thing works, all it's got to do, now that you look at it, is say, hey, there's the VWAP. And we know that once it gets past the VWAP, this thing could really go. And here's where the, let's see, the VWAP closed yesterday, well up, even north of here. The VWAP yesterday was up here. So the VWAP down here is simply a function of that early morning selling. So if this returns to yesterday's fair value, then this price is reasonable. So my potential reward, not crazy, is that. That ain't bad. If I then, just using arbitrary, eyeball here, 1, 2, 3, and say if that was 3 units of reward, that size of a reward box would give me a mechanical stop down here by the position number 3 for the PSAR flip. And if I use that as 1 unit of risk, I could have 1, 2, 3 units of reward. So even with the widest stop that's on this chart, that gives me a 3-to-1. So your other places of where you could set for your execution, what would you take as evidence that this potential upward move really was not going to work? And that really tells you, where do you put your execution risk stop? What is the adverse price from here? If this starts failing, what's the tripwire to go short? Where do you exit? And then would you stop and reverse? And then you could say, where is my collapsing dragon? So I want to answer those 3 questions. Starting with the collapsing dragon. You could collapsing dragon if you were aggressive at the belly of the RL10. Belly of the dragon, excuse me. So that is a potential CD. That's an aggressive. And then the not later than is probably this one here. At the belly of the RL10. So in the chat room and on your sheet, well, Greg, how do you know what the volume is on this thing? There's no volume indicator. Or do you mean the VWAP? Yeah, so I see some votes for 1 and 2 and 3 and 2 and 2. In my view, 2 or 3 is reasonable. 2 or 3 is reasonable. I think 0 is too close. You are more likely than not just to get stopped out on genuine noise, because the size of these bars, and you're going to have a stop right here, that could be a 1-bar noise. I mean, so at a minimum, I would say 1 is aggressive, 2 is not unreasonable, 3 is sort of, I wouldn't be any farther away than 3, because that's where I want to CD anyway. So given, that's probably where I want to CD. So given the fact that the VWAP was way up here, and I could have a 3-to-1 anyway, even with a risk box at 3, I like 3. I could live with 2. I think 1 is very aggressive, and I think you then have to figure out if it hit that and then started to go back up, would I re-enter right here anyway again? So let's say it went down and tripped me out and then broke up right again. It's breaking above the R10. Would I then have to re-enter? So maybe the argument for 3 is it really takes a significant lower price, and then I'm short where I want to be short. So 1, 2, or 3, I could live with any of those. Okay, so by this time, you know, I think I guess personally I used 2 because I like triggering the PSAR. So now we got about an R into this thing. And your fireman says, hey, I saved you this time. In retrospect, this really does look like a routine kata 2, doesn't it? Because we got this and this successful trade. The PSAR dot just crossed the Bollinger Band mean. It crossed your entry. So now this is like the trade is out of the noise box and into the gain box. And price is right here. So where could we put our stop? We could be at break even, at the VWAP, at a 2-bar low, or maybe split the difference here and call that if I said 1, 2, 3, 4, 2, so 1 locks in nothing, 2 locks in a no lose plus dinner for 2, which is about maybe a 0.3 win. The other thing that I notice is we're getting very close to rolling over, which means if I am using that dragon skin exit, then I can make that argument that 4 locks in 1R. What do you like? 1, 2, 3. I think we can agree 1 would just make you mad. Like if you had 1R, now listen carefully, George. If you had 1R in hand and somehow you let that come down and lose money, that should really make you angry with yourself. Like if you did that you should be angry on that. Don't do that. There we are. I don't think 4 hit it. May have been very close. Everything's looking good for 1, 2, and 3. This is your next leg up. Now it really is a science project, right? Now you could say, here's my 2-bar low, which is now at the top of the dragon, spine of the dragon, belly, or PSAR flip. One of those 3 is probably any good. So 1, 2, 3. If you let it come all the way back from here, there's your price. If you let that come all the way back to here, wouldn't that just hurt your feelings to only capture this much out of that much? Doesn't that feel like giving back 2/3? God, that would just drive me nuts. So 1, 2, 3. could think about to our battle drill in 3. Not crazy. That works really, really well. And if you follow the rules, now you get more than 2R in hand. You're justified in taking that exit because the R10 just rolled over after leg 1, leg 2, leg 3, and now it rolls over. There's exactly nothing wrong with that exit. Or you could take this one or that one. So 1, 2, 3. 3 is cashing it for 2R win. 1 or 2 gives you a little more room to wiggle. What do you like? I took 2. I thought about getting short on the break of the VWAP or a break of the Bollinger Band main. God, that's a giant red dot. Put it where it belongs. I took it right in here. Took the PSR. I thought hard about this and then didn't take it. And then because there was a 2-to-1 just retracement back to the VWAP, and then it broke through the VWAP and said, too late. Can't chase. That's how dumb I felt not taking that trade. But then I said, you know what? Let's go ahead and 1, 2, 3, PSAR flip, standard risk box, micro loss. Probably should have been short right there. Second chance to be short. Missed it. Caught a 2. PSAR flip. Spring becomes summer. Crosses the VWAP. Feels good. And it dies for 1R. Missed the re-entry. Thought about it and said, nah, it's done. And then missed that one. So that was kind of a day in the life. This was Caterpillar, great American company. And if we hit the tote board, you never count your money while you're sitting at the table, I suppose. But you get a sense of how big your chip stack is. You should know where you are in the money. So that one is plus 2. I just missed 2 on that one. This is minus 0.3. And this one is plus 0.5. So those 2 scratch. So 2R for the day. And I missed this one, and missed that one, and missed this one. And still a couple R. We'll take that. Caterpillar. All right, so this is another one of those things. The trader comes in and he doesn't know what to do. Oh my God, I can't believe I entered, sir. I just had a knee-jerk reaction to price movement that it opened here and then went up into here, so I bought it right there. There's my entry, sir. It was coming very near that emerging dragon. And so we just did a quick, you call your little scout in and you say, what do you see? What do you describe? And he says, well, I notice from yesterday's close was down here. Then it was a big gap up and then started to fail. The R10 catches up and then rolls over right here to A, which sets up this price level. I noticed the highest high of the day was here. We might call that B. I noticed that when it rolled over and fell through the dragon and punctuated the PSAR, it came all the way down to the Bollinger Band mean and then quickly reversed. And this is where the R10 reversed, so I noticed that as an important price level. I noticed that on this recovery, it got all the way up exactly to A and then reversed. That was enough to make the R10 get to the PSAR, but then reverse. So it didn't flip the PSAR. I noticed it come through the Bollinger Band mean, and I really wanted to trade it there. I didn't, and I felt regret as it failed all the way back to here. So now I got all these negative emotions. Like, I missed the fail. I missed the fail. I missed the fail. I did notice, however, because I'm a resilient fella, that I've got a higher low. And it PSAR flipped. And then it started to run. And I just said, oh, I'm not going to miss this one. So he just says, my knee-jerk reaction was I entered here. And now I've got to decide where to put my execution stop. So the choices that I see would be if the previous PSAR and skin of the northern skin of the dragon, that's what that is. So if this thing, it would be coming through the Bollinger Band mean all the way down to the northern skin of the dragon, I could see giving back that much. Because actually, that's 2R just to the high of the day. I could see at 3.5 would be this belly of the RL10, or 3 at the belly of the dragon. 2 would be the point of the RL10, the PSAR flip, and then 1 would be the low of the day, which is also that PSAR flip. So now, Mr. Risk Manager, realizing that I've got not an unreasonable chance of getting that, 4, 3.5, 3, 2, and 1. Now, should I pick this? This is a trick question. Should I pick this in order to justify that I have a 2-to-1? Or should I pick the exit as a reasonable failure that says end of move with confidence? Which one of those should I use as a decision on where to place the stop? I believe we should pick the stop that persuades us that this move is not happening. So I look at it this way and says, if price was here and I bought it and it starts failing right away, if it got to here, is that enough to persuade me that that move is not working? Or do I need to see it get through the previous belly of the RL10 or the belly of the Dragon or this one. So 1, 2, 3, or 4. Which one is enough persuasion? And where would I stop and reverse on this one? Had a big gap up which failed once, twice, 3 times. If this starts failing from here, the last time it was at this price level and it failed, it went all the way to there. So maybe what I got to do is treat this as my reasonable price target to the downside. And if that's the not unreasonable move, maybe what I got to do is, if I exited at 4, I could actually justify that as a 2-to-1 trade on that reasonable target. So that's the argument for 4. The argument for 3 is that I've given it a wide enough stop that it really has to fail, and that would still give me a 1-to-1 to the upside, and I'll teach my trader to do better than this. But I'm not going to just try to pick a price that arbitrarily gives me a 2-to-1 once I've made the mistake and entered and say, oh, let me put the stop where it needs to be. I personally like 4 as I look at this now, but I could live with 3. I think 2 and 1 are too far away, because I think not later than 2, I got to be short, and certainly by 1, I got to be short. In fact, I'd like to get my first short position not later than here, and then a second short position if it breaks through that. Like I might double short. Because this would also be a new low of the day. And then how could I determine how far to the downside this could go? How do I compute the downside target? High of the day minus the range stat. So I could come up with whatever my target was, and I can probably get 2 positions in on this one and big fail. Okay. Key lesson. This is dynamic framing. It's grinding, it's grinding. The PSAR is caught up to the dragon, and it's working. And now here we are against all odds. It makes it to B. Realize that there's no reasons inside this range to be thinking about second positions yet until you've kind of cleared all of this crap, all of this noise. It hasn't proven anything till it gets above B. But if it gets above B and it's a new high of the day, how could I compute the upside target of this thing? Yes, go to the low of the day, add a range stat, and that would tell me, do I add a second position from up there? Answer, yes. So I'm now thinking about, is this where I'm going to add a second position? If it makes a new high of the day, yes. So where is my stop? No matter where my stop was initially, where is my preservation move right now? I could say to upper skin of the dragon, PSAR, previous breakout or peak, that just feels like a natural Bollinger Band main, VWAP. 5, 4, 3, 2, 1. I look at all this crap here. I picked 2 Pokemon. Now, Under what conditions would I pick one? If I pick one, what could I do? How about if I put a second position right there and then said, you're either going to work or you're not going to work right away. Show me what you're going to do. Because if that gets out, I get to win this. And I lose that, which means I lose that, which means I get to keep this much of, I use 3. So that would be, the worst case I get out of that, if I add a second position, is plus 0.5. Otherwise, if it breaks to a new high of the day, I've already got 2 positions free and clear. Just a thought. That one would have failed. And the PSAR flip and the Bollinger Band mean fails. Now, as I see this, what is my thought process? Oh, shit. You can see. Where does this find support? I'm really interested in knowing if it finds support anywhere in this region above my initial entry. So if it could do this, I'd be happy. By the same token, if it held support higher than my initial risk, like if this came all the way back to here through the V, I'd actually say if this held anywhere north of the VWAP, that's very good. If it held north of my entry, that's very good. But if it held north of my original stop, that's pretty good. It's not great, but I could still argue that there could be a kata 2 that comes out of a support level that is north of this support line, which was the bend of the dragon, right? I would rather see it, find support in this region. Check or hold? Now, as this is failing, I should also, so if my first thought is kata 2, that tells you what my bias is. That also tells me I better frame the other side of the trade. Now, let's take, if this were to fail, is it irrational to think that it could fail to the previous low of the day? Is that a irrational move? No, it's a rational move. So if I got short there, then it would be because I was trying to aim for that. I could now reasonably think, could I get short here at the Bollinger Band mean? Yeah, if that then started to reverse, I'd be right into the kata 2, brain drain. Or do I get short if it breaks the VWAP? I think you have to get short not later than crossing of the VWAP. Because that still gives you a target of the downside to the belly of the dragon. That's a reasonable move. And then that's a reasonable move. So I think if I use something like get short here, and then use maybe the Bollinger Band mean as my risk box, which is a little bit less than this big box, then I could frame my trade to the downside here. Let's see, 1, 2, 3. Then I could preserve this space and say, look, If it finds support in here, then I'll kata 2 to the upside. But if it falls all the way to here, then I'll do a short because I'm going to respect the VWAP. And I'm going to treat that as my downward bias. Gives me a kata 2. Standard work. I should be at no lose plus dinner for 2 already. So now all that work I did for the downside, we just put that back on the planning shelf. Standard exit, check or hold. Do you see why you want to have these things as like standard plays? So that you're always thinking about it in the same way. So now what am I doing here? I see this thing rolling over. I revealed. Darn it. You know, the question is on this sell-off, was it going to come down and penetrate the VWAP? It's testing the Bollinger Band mean. Does it come down and test this? If so, then I can still activate the short the same way I thought about it over here. So all the thinking that I did over here, I can just cut and paste and drag that over here. That maybe I just use the VWAP as my trigger. This one here, yeah, I like that one short on the Bollinger Band mean because that one kind of erases all of this. And then this little reversal, I can just cut that. And then I can get long here. Kata 2 again. So all we're doing on this one and you just got to ask yourself, how do you feel capturing this trade? Making that much against a risk of that much. How does that make you feel? Are you happy with that? Hitting a single? Put a letter Y for yes and N for no. Do you feel okay on that? Feel professional? I do. This is lather, rinse, repeat. Same trade. Kata 2 breakout. Maybe I gave back too much. Maybe I should have been a little better on my exit. If that was my exit today, which it was, I could say, hey, maybe when this rolls over, I should be looking to get out in here or at the PSAR at that level instead of this level. What did that inefficiency cost me? I cashed this much, but I missed that much. I gave back. That to me is waste. Muda. And I still got this whole thing as a short. But now notice how the strength of the move is leaving the VWAP behind. And I'm just tracing the distance between the Bollinger Band mean, which is price, and then the VWAP. That means this is on lesser and lesser volume. And I'm starting to run out of time. Is that a Kata 2 I can take? Would you take that one? I'll let you take that one right now. You got more than an hour left in the day. Do you take that one? With a risk, with an execution box like right there? And your position sizing box is like this in order to be consistent with this one and that one and that one. So if you take that little trade right there, you don't double your position size. You just say, look, if I get out here, I'm going to just take a minus zero point 0.5 execution R because that's going to be my full 1.0 execution R, which is zero point 0.2 position sizing R. So I'm never at risk to the portfolio capital. I'm just trying to hit singles. So the question is, do you take that trade with this as your execution risk and with standard position size? Yeah. Now, later after you've got 1,000 trades, you might say, hey, if I'm not going to get any slippage, I could double my position size, and then you'll burn yourself at some point. If you took that trade, you were happy. If you were me, you didn't take that trade, and it's just one more decision that I made. There was even a second chance on the Kata 2, which I didn't take. And that little pullback never triggered you out because you had set your stop here at the belly of the. See, that's the point I want to make there is that you set your stop firmly here. So this is just noise. This is the price that gets you out with a minus 0.5. Let's see, is this... trying to see which one this is. It's probably Alcoa. Yep, Alcoa. That's kind of normal. So in retrospect, some of that grinding gets you to that one's about 0.5. That one's about 0.5. That one's about 0.5. This is about a 1.5. Do you want 1.5 a day? Would you be happy with that grinding? Yeah. Nothing wrong with that. There are just some days when that's the way it moves. And if you take care of business on these, periodically that thing will do that instead of making the channel pullback, right? This tells you something about the size of the normal channel of Alcoa on a grinding day. If you're a Alcoa channeler, you should know that the peak to trough is 30 cents. And you should know that your PSAR box is smaller than that. It's about 15 cents. And you should know that your R10 is 20 cents. So that's a 30-cent channel. Is a tough way to make a living with a 20-cent risk box. But you're going to hit singles. So, an important lesson. Now, let's see, George. Now, on this one, this is Alcoa. That's a great entry. This move to here, got through the Bollinger Band mean, bottomed out, and then started to reverse. And that's your execution risk box was here. I think it should be here. Fractional difference. But this was at its peak, +1, and we let a +1 trade get to minus 0.4. That we actually let it reverse 1.5 against us. So I don't like, when you go back and see, is 1.1 our max favorable excursion, is that greater than your average win? If so, we let a greater than average win go negative. The no lose on a 4 bars in your direction, maybe that should be a no lose plus dinner for 2. I don't mind this one, that entry. Although we got here, it reversed, started coming back up. I like that. I think this execution box is not correct. It should either be the belly of the dragon or the Bollinger Band mean. I'd like to see that a little bit wider. But again, as soon as this doesn't work and it crosses the VWAP, that might be enough to just get you out. And then this should be a short, and you're saying, hey, too many losses. There were 2 losses with tightly controlled risk. And a decision to state that as too many losses, so not to take that one, says the price doesn't have a memory that you lost money on that trade. It just knows where it's going. And it gave a winning trade. And then here's a PSAR flip. And that gave a 2-leg winning trade. Too many losses. And then when your emotional state was back to 0, after this move is up in here, and we're north of the Bollinger Band mean, which is holding, and north of the VWAP, which is holding, we're getting short on no signal. That's not a PSAR flip. Unless you're... I mean, that could be a PSAR flip short here, I guess. But we're going against the direction of the trend, which is up. But that's good risk management. That could be a stop and reverse, and you'd get paid here, as we saw. Because there were a couple more cotta twos because it's only lunchtime. So the point I want to make there, don't let above average win. This one got through the Bollinger Band mean and then quickly rejected. That's a reason to take a partial win. Don't let it become a partial loss. And then these decisions saying there were too many losses, if you're a coin flip, you're going to see 5 or 6 losses in a row in your near future. And there's no memory going forward. You got to have a thicker skin and taking the high quality signals. That's not a high quality signal, that one right there. So those are the running points. Now, you said yesterday on your AAR that you were going to watch the VWAP and watch the Bollinger Band mean. If you had, we'd have been short here, and we'd have been long, especially here, because this is where it crossed the VWAP and the Bollinger Band mean on a higher low. This was the Kata 2 long of all signals. Then this was the confirmation that it was working. We could have added a second position here. Failure to fail. And then probably exited here and then re-entered here. Food for thought. Gap and go. I don't mind that one at all. That feels okay. I like the exit. I want to see where's the short right here. Oh, okay, no shares available. Tried to. Okay, got it. Still, that's the right signal is short right there. All right, let's get to the daily trade reports. Nice little recovery at the end of the day, promising a Kata 2 for tomorrow. It held support where you'd expect it to hold support. That's why I like the 30-minute charts lets me see the swing trader mentality. Long side bias, a brilliant Fed day, higher lows, it held support, good recovery into the close. Tomorrow could be a tactical up early on a Friday in the S&P. So we got to be ready for that. Made a little recovery today. Bullish normal, favorable volatility. Some auto framers are setting up nicely. Today was a tactical day. Only agriculture and marijuana were breakdowns. So today was kind of an inside day, which favors the long side early tomorrow. We'll see. Watch the futures. Some auto framers that are reasonable setup. I think Coke. Somebody's got to start believing it. Brazil is setting up. Some squeezes in Walmart, Disney, and Goldman. I like them all, especially Walmart as a trader. Split between summer and winter, and we've got the usual suspects in the frog list. I missed where was my index? Here we go. All right, let's take a look at the... So the slope of the 30 is still in decay. The 10 is in decay. The 90 is rising. Tomorrow is a tactical trade day. We're going to find out if there's any willpower to hold that long over the weekend. We'll see a strong day tomorrow. That would be a very positive signal from the powers that be, that they're invested on the long side, if they're willing to hold this overnight. If they let this collapse, that tells you this was the end of a tactical move. That's how I'm going to read it. All right, that's everything for today. We'll get this published and posted. You guys that are in the Foundations course should really listen again to the Q&A session we just recorded tonight, because it talks you through why the briefings from Luke, Sanal, and Jeff were so important. That should take that as a package. It's some quality stuff right there. All right. Take good care, and we shall see you tomorrow.